So as we all know, for any economic revival, you need to have fiscal measures as well as monetary measures. On the monetary side, we have seen the MPC coming out and reducing rates by 110 bips, and that's a very welcome move. There was a lot of expectation that the fiscal stimulus would come by, and last weekend we did see the finance minister announcing a slew of measures. There has been some succor for the automobile segment. They have taken away the surcharge of FPIs, which is a very welcome move. They've put upfront recapitalization of banking system, which is which will have a multiplier effect. They have provided a lot of liquidity for SMEs and MSMEs. So I think these are very welcome moves, and the FMS promised that there would be more to come. We expect the finance minister to touch two more segments. One is the real estate segment. The real estate segment has been going through structural changes in the last 3 or 4 years since Demon, RERA, GST and other liquidity challenges that the sector has faced. We do expect the government to come out and provide some incentivization for reviving this sector. While they have done some incentivization for the affordable housing segment, we need this kind of incentivization for the higher ticket housing segment as well. We also need some kind of infrastructure push from the government, because private capex has seen a prolonged weakness, and we don't expect a revival there in the immediate future. So what will pump prime the economy is the spend by government on public capex. So we need to see that push coming in from the government. We need to see how this 52,000 crores which the RBI has transferred to the government is utilized. If that is utilized for infrastructure spending, and that would be a big positive, and we need those kind of measures from the government to actually pump prime the economy. So markets are facing challenging times. There is a global slowdown which has happened, and also the fact that there is a US-China trade war which is on, and it appears that this situation is not likely to resolve itself in the near future, which will keep the markets on tenterhooks. Having said which, if the domestic issues are resolved, then the market could see a revival. If you see the government coming ahead and announcing some more measures to pump prime the economy, the markets should start to look up. Also, the markets will will look up if the FII start investing again. Despite the surcharge being taken off, the FPIs have yet to start investing in India again. It's just a matter of time, because India is one of the fastest growing economies in the world, and we should see the FII interest coming back. It is just the currency volatility which has also caused the FIIs to kind of stay away. Once that happens, I think the market should revive, and from here on, we do expect that markets would be close to the bottom. So we like the banking space. We like both corporate and retail banks. We believe that probably the credit costs could have peaked out. The asset quality stresses could have peaked out. While we could still see some stress coming in because of the NBFC crisis, we could see some stress coming in from the SME, MSME segment. There could also be some retail delinquencies coming from this year. But I think the proportion of these stressed assets may not be very high, and therefore we do expect that the banking sector would post good numbers. Even the IBFC resolution process, though it is delayed, I think would result in good write-backs for the banking sector, and that would also result in improved results. So we like the banking sector. We also like the capex place. We believe that with the infrastructure push coming in from the government, these companies could start to have better execution. They already have good order books, and the execution pace could pick up, and that's another play that we like. We also like the IT space. We think that the volume growth is decent, and the rupee depreciation could augur well for the IT sector. So I think that is something which that's another segment which we like. We also like the cement space. I think the pricing there will improve from here on and post the monsoons, and I think that should bring about good EBITDA per ton for the cement sector, and that sector is also something which we like. So basically, we also like the consumption theme. We continue to play with it. We think the slowdown in consumption is cyclical and not structural. So structurally, we still like the consumption theme.